Welcome to May's Business Outlook Survey press conference call. My name is Catherine Dibling, Senior Media Representative, and with me today is Mike Trebing, Senior Economic Analyst, also with the bank. Today we will take questions from reporter Kathleen Madigan of Dow Jones. But first, Mike will give a statement that sums up the results. Mike?
Good morning. Manufacturing executives responding to the Business Outlook Survey this month continue to report improvement in manufacturing, although some of the survey's current indicators fell from their readings in April. Indexes for general activity, new orders, shipments, and employment all remain positive this month and suggest continued growth. Overall, firms remain optimistic about growth over the next 6 months, and responses to supplemental questions about production and employment plans indicated uncertainty about future demand, future employment costs, and excess capacity as reasons for not hiring additional workers.
Thank you, Mike. Kathleen, do you have any questions?
Can you talk a little bit about the prices paid, which it continues to really rise? Any sense of what the costs are rising, and are there any comments on the differences between the prices paid and prices received?
Right. We actually saw a little bit of a fallback in the prices paid number this month, reversing some of the increases we saw the last 2 months. Mm-hmm. But on balance, still a large share of firms reporting increases in prices, 39% compared to just 4% reporting declines. There were no comments in particular about the nature of the cost increases this month, with focus being more on overall conditions of demand. And on the prices received side, we saw a little bit of an uptick, but still those diffusion indexes for prices received have been so close to zero that we're saying pretty much flat manufactured goods prices, with still a large share, 66% of the firms reporting no change in prices again this month. So although costs continue to be a factor, they're not being passed on to the customers according to these responses.
Okay.
Kathleen, do you have a follow-up question?
For the special questions, I noticed the uncertainty about future employment costs, the health care costs, which I assume is a result of the health care overhaul. Has that been mentioned before, or is that something new?
We haven't addressed that question this way before. Once a year we do ask about their expectations for various measures of costs, raw materials and wages and healthcare related costs. Mm-hmm. And I believe that was done at the end of last year. This time we really wanted to focus their attention on both production and employment growth over the next 6 months. Mm-hmm. And as you may have noted, we had many more firms indicating that they were going to increase production over the next 6 months, about 59%.
Right.
But a much smaller percent of the firms actually hiring additional workers, about 30%, with most of the remaining firms saying that they would increase work hours of the existing staff or increase productivity of the existing staff. And then when we ask about the reasons for those firms not hiring additional workers, as you mentioned, the cost of future employment, healthcare costs and wages, was on even par with the answer about uncertainty about future product demand. So those factors are continuing to hold back employment, as well as plant operating capacity, which is currently about 70%, far below averages we've seen in previous decades. So all of those factors are important in evaluating the employment forecast going forward.
Mm-hmm. But we can say that at least increasing the work hours does increase personal income in the area.
That's correct. And on the current side, we are seeing some improvement on the employment diffusion index, as well as positive numbers for average work hours, and that's consistent with what we've seen nationally with 4 months of positive employment growth in the manufacturing sector overall.
Mm-hmm. Okay. All right, great. That's it for me.
Okay, thank you for participating, Kathleen.
All right, thanks. See you next, or hear you next month.
Thank
Okay.
you.
Bye.
Okay. Well, looks like we're making some steady progress with the Business Outlook Survey General Activity Index. But it seems like if you look deeper, there's some uneven progress. I thought it was pretty interesting that the new orders fell 8 points, but it's still positive. Shipments increased 10 points. However, the indexes for unfilled orders and for delivery times were negative. Do you have any idea or sense of what's going on there?
Right. We look more at the nature of all of the indexes, I think, and the general activity number kind of summarizes the firm's overall impressions of conditions. So I think that's our guide. We did see some fall back in some of the sub-indexes this month, including employment, but still we're seeing pretty positive numbers. Perhaps some of that uncertainty or wavering in some of these numbers month to month has something to do with the strength of growth. I mean, when we look at the comments, we're still not seeing many firms indicating robust growth or superior business conditions. Everyone's mentioning slight uptick, modest growth, some evidence of improvement. So we still have a long way to go, I think, before we're reaching production levels that we saw pre-recession. So that may have something to do with these month-to-month wiggles in orders and shipments, and also a somewhat lower number on the 6-month forecast for activity this month as well. But still over 50% of the firms indicating that they do expect growth to continue on orders and shipments in the next 6 months.
Kathleen talked a little bit about the special question, but do you have anything else you'd like to talk about?
No, I think it was interesting that we were able to capture what everybody's talking about. The reasons for the employment gap, I think, and as indicated, a lot more firms expect production to increase over the next 6 months, but a far smaller number expecting employment growth. And again, it feeds into their explanation, I think, that all of these factors, the uncertainty about demand, healthcare costs and wages, and also their current capacity utilization rate, are all almost equally important factors in explaining the lack of employment expectation.
I think we need to back up a little bit. What exactly was the question, and what were you trying to get from the manufacturers?
Right. We asked them to characterize their short-run production and employment situation, asking them whether they expected to increase production in the next 6 months. And then if they did expect to increase production, how would they do that? Would they do it through increased employment or through productivity of existing staff? And then for those firms that didn't plan on having additional hires, what were the reasons for not doing so? And the factors that I mentioned all came into play in the question.
Is there anything else in the report that you'd like to talk about that you find significant?
I mentioned the comments. The comments are always helpful in gathering the tone of the responses. We can rely on the diffusion indexes as good indicators month to month, but it's helpful to hear comments as well. As I mentioned, no comments about prices and a few comments about employment because of the way we focused the question. Many firms did indicate that existing staff wanted to see higher hours rather than new hires. So, And as Kathleen mentioned, this does have an impact on income being generated from the manufacturing sector too.
Thank you, Mike. We will see you next time on June 17th when our Business Outlook survey will be released at 10 a.m.